Welcome to The Explainer. Today, we are digging into a real stock market mystery. We're going to put on our detective hats and investigate how a single stock managed to explode over 450% in just one day. How does that even happen? Well, we're going to follow the clues in the data to break down exactly what went down.
Okay, let's just dive right in. Look at this number. On January 17th, 2026, one stock, Venus Concept Inc., that's ticker symbol VERO, did this. A gain of over 459% in a single day. And no, that is not a typo.
So, this obviously raises a huge question. How on earth does something like this happen? Well, to answer it, we're going to act like financial detectives. We're going to sift through all the clues and the technical data to piece together the story of this absolutely historic surge.
So let's establish the scene of our mystery. What were the basic facts on the ground at the end of this totally chaotic day?
The stock, Venus Concept, is what you'd call a penny stock, which, usually means it's super low priced and can be pretty wild. It finished this incredible run at a cool $8 a share. And get this, in just one session, it managed to erase a huge chunk of its yearly losses, landing itself right in the middle of its 52-week price range.
All right, let's start digging into the first set of clues. The big, flashing neon signs that were telling everyone that something massive and powerfully bullish was happening.
So before we can really grasp just how crazy this move was, we got to talk about what's normal for a stock. And we do that using something called moving averages. They basically smooth out all the price noise and show us the underlying trend.
And this is where it gets absolutely wild. Just look at that enormous gap. The stock closes at $8, but its normal cruising altitude, its 50-day and 200-day averages, are way down around $2. It didn't just beat its averages, it launched itself into a different solar system. The long-term trend was violently flipped from bearish to bullish in a single day.
And it wasn't just the averages. Other signals were screaming the same thing. There's this indicator called the Parabolic SAR. Just think of it like a little dot that follows the price. If it's below the price, that's a buy signal. Well, on this day, that little dot was way down at $1.39. The buy signal wasn't just on, it was practically setting off fireworks.
But okay, a price move this violent needs some serious horsepower behind it, right? A trend is one thing, but a 460% explosion requires immense force. So our next job as detectives is to find out what was fueling this rocket. What was the engine behind it?
Yeah, we gotta ask, what was the motive here? What kind of raw power can launch a stock into the stratosphere like this?
And the answer in one word is volume. The sheer number of shares that were changing hands. On this day, over 309 million shares of VERO were traded. That is a mind-boggling number.
And this chart, wow, this really puts it all into perspective, doesn't it? That tiny little bar on the left, that's a normal day. That skyscraper next to it, that was this day. We're talking nearly 19 times the usual activity. This wasn't just a busy day at the office, this was an absolute frenzy.
This incredible volume, this buying frenzy, it screams one thing: a massive short squeeze. This is that classic scenario where folks betting against the stock get totally caught. They're forced to buy back shares at any price just to cut their losses, which only adds more fuel to the fire, pushing the price even higher. It's a vicious cycle of frantic buying.
But every good mystery has a twist, right? And when our financial detectives start digging a little deeper into the data, some pretty confusing clues start to pop up. Things that suggest this rally might not be what it looks like on the surface.
So despite all this incredible upward momentum, the source report we're looking at throws up this huge red flag. It signals that the situation had become incredibly dangerous, that the stock was technically extremely overbought.
So let's break that down. Think of an indicator called the RSI as a speedometer for a stock's momentum. A reading over 70 is kind of like you're speeding, while VERO's speedometer was pegged at 93.26. The needle was way deep in the red. That's a huge sign that this thing is moving too fast, too furiously to be sustainable.
And it gets crazier. The stock was basically driving completely off the road. You have these things called Bollinger Bands. Think of them as the statistical guardrails on the highway for a stock's price. VERO closed at $8. The edge of the guardrail, the absolute edge of the road, was way back at $4.74. When you're driving this far off the road, a correction is almost inevitable.
And now we get to maybe the biggest, most troubling clue in this entire case.
It's something called a divergence. See, there's an indicator that tracks what institutional investors, the smart money, are doing. And while the price was going through the roof, probably from all the smaller traders piling in, this indicator was pointing sharply down. Think about that. While the crowd was rushing in, the big money was quietly slipping out the back door. That is a massive, massive red flag.
So, after examining all the evidence, the explosive bullish signs on one side and these really serious warnings on the other, what's the final verdict on this historic day?
So what we're left with is this incredible paradox. The data is telling two completely different stories at the exact same time. On one side, you have the bull case, a historic gain, insane volume, a trader's dream scenario. But on the other side, the bear case is just as strong. It's dangerously overbought, flying way outside normal behavior, and the smart money is cashing out. It's a total contradiction.
Ultimately, the big takeaway from the technical report is pretty clear. This wasn't really an investment opportunity in the traditional sense. It was much more like a high-stakes spin of the roulette wheel. The data was screaming that chasing this stock at these heights was playing with fire, with an extremely high probability of a sudden violent crash.
And that leaves us with the final question, the big one. Looking at all the evidence, was this a once-in-a-lifetime opportunity for the lucky few who got in early, or was it just a historic warning, a textbook example of a speculative bubble about to pop for everyone else? When you look at all the clues, the fascinating answer is, it might just be both.